Mr. Theron, BHP Bulletin, Potash is off the table.
I mean, I can't believe the Canadians, really. If you think about it, this whole thing about resource nationalism, you'd think if anyone was going to be more mature about the whole thing, the Canadians would be. But we know this thing is now off the table today. Bulletin kicks it into touch. Initial reaction from the Bulletin shareholders seems to be quite positive. But you know what, this thing's got me worried is that long run, what Bulletin needs is not only high commodity prices to justify its elevated share price, but also much increased production volumes. So where are they going to come from? If you can't do a deal of this scale, if the Canadians of all people won't allow you into their backyard to start looking at these kind of assets, then, you know,
give money back to shareholders. Give money back to shareholders. Share buybacks appears to be the program. They've got to
exactly. I mean, at the
pacify
moment, that seems to be at least
the
initial reaction. So resume the old share buyback program. So far, so good, and probably come back with something new. I saw Goldman Sachs back on calling this one a buy. It's been off the list for a while because they couldn't be rated on it. But quite frankly, I begin to worry a little bit about this.
About Marius Kloppers?
No. I mean, Marius Kloppers, I've seen these comments. I think that's completely ridiculous.
I see you've been active on Twitter saying that you don't feel it's a fair assessment of his performance.
He's as secure in the position as ever. I mean, obviously, shareholders might be saying 1, 2, 3, and I've seen these comments, you know, 3 strikes.
Of course, a sensational media headline.
I think it's nonsense. I mean, the shareholders are very happy with the way that the current assets have been performing, and they're very happy with the idea that you pursue these kinds of transactions. For me, the obvious thing to do would be to step out and look at the oil business. I mean, in the oil business, Bulletin, as big as they are in that environment, are a relatively small player. They could buy anybody they like. They could move into the Gulf of Mexico and pick up 2 or 3 or 4 smaller competitors.
Let's come back to the statement that you made earlier, is that perhaps BHP Bulletin is too big to make any deals at this stage.
Well, it's unfortunate that this kind of resource nationalism has begun to hold sway around the world. We saw what the Australians did with taxes. We've seen what's happened here on this local scene. This just drives me absolutely crazy, because if you think about it, there was a time in history where whale oil was the most significant, you know, economic resource. From one moment
down
to the next,
resource nationalisation in your view?
Well, I don't know. It's from one minute to the next. What is important today is unimportant tomorrow. So for the Canadians to say, no, look, we must have our own little, you know, potash company because that's how we will control this resource best for Canadians, seems to me to be very short-term thinking. And they played straight into the hands of the greedy management of potash. And it wouldn't surprise me now to see potash trading significantly lower.
BHP Bulletin, 269, valuation from here. And first of all, I want disclosure. What exposure have your clients got here?
Heavy holders.
I always like it when you're honest with me.
Heavy holders here. We think it's the best play in the sector. As I say, I just worry, though, that, you know, in order to grow this thing, for it to be 500 Rand a share in years to come, effectively what they need to do is to get this thing to a position where it's producing much, much more in terms of physical tons of whatever it is. And if you can't get these deals done, it remains, for me, interesting to see how they're going to justify those kind of levels.
Looking at the eurozone back in focus, we knew that the focus would shift from the US back to the eurozone as troubles came to the surface. It's all about the peripheral economies, Ireland, Portugal. Are you one of those with the stance that Germany can save the day? It doesn't matter about these peripheral economies.
Look, I don't know about Germany, but the fact of the matter is you can see from the way the FTSE's trading today that nobody gives a continental about the Irish. You know, they can do whatever they like. They're not significant in the bigger scheme of things. Otherwise, the FTSE would be sharply off.
We're offending all those Irish viewers out there. My apologies for Paul Theron. What can I say?
It's the Irish banks, which obviously completely overextended themselves, and now they're in some kinds of trouble. The government of Ireland appears to want to tap a centralised resource which the EU community has for troubled banks, and it doesn't want it to be seen as a sovereign issue. I don't know. I mean, the Irish obviously are part of the euro. They have no currency. They have limited degrees of freedom in terms of what they can do. But the market is telling you that nobody cares. Otherwise, we'd be sharply lower. The fact of the matter is it's now...
But the euro is under pressure. With the euro under pressure, we're at 136 on euro dollar. Surely that is an indication that players are taking this seriously.
I suppose so, although don't you just get the feeling that it's the currency players that are pushing this thing around in order to try and drum up a bit of enthusiasm so they can trade with each other? I mean, the rest of the world, as far as equity valuations are concerned, about the idea that, you know, the market's going to be fine, that corporate profits are going to be fine. You know, a couple of Irish people might be out of work, but, you know, in the financial services sector, who cares?
How do you feel about interest rates? Do you care? It's obviously going to be the focal point for this week. You're going to be speaking about it tomorrow, Wednesday, Thursday, and Friday.
You know, I have this view again that, you know, for interest rate and bond traders, these things are important. But for me, the economy is what counts. What counts is equity prices, which counts as profits. And at the end of the day, what the Monetary Policy Committee does is a trailing indicator.
So you never change your investment stance before or after interest rate decisions?
But you'd be hard-pressed not to take it seriously at some level, because these share prices of interest rate-sensitive stocks go up and down so much. I mean, it drives me crazy. The retailers will double their PEs from the one point in the cycle to the next.
Talking about the retailers, what did you make of JD's results? That stock way outperforming the JSE, all share up 2 3/4%. We're at 55 Rand 40.
Case in point. So that's a share price where, because they're under pressure, because they're having a bad time, because the cycle seems to be turning, interest rates are starting to come down, credit looks a bit shabby, the investors completely lose faith. The thing sells off down to rock bottom prices, and now it's in the rebound. All of these stocks look like they're discounting a huge uptick in earnings to come. But I'm not so much criticizing that in the market's behavior. What I'm criticizing is the inability to see these things through the cycle. I mean, why is it that the share price of Woolworths must double from the top to the bottom, not only in terms of their earnings, but also in terms of the rating that the market's prepared to accord to those
Again,
earnings?
Disclosure time. What is your exposure in this retail space? I'm taking it because you're so negative.
Happy days.
Or is it happy days?
We were heavily in Massmart, and we got the meal ticket from heaven there. I mean, you know, Walmart.
Did you cash out?
We cashed out. We cashed out at the 145 to 148 range.
So you're not waiting to see where this one goes?
Well, you know, we're of the view that it is going to go through, but it looks like it could be some kind of partial offer. So that's never a good thing. In other words, you might get an offer for a portion and you have to stick with the rest.
So you made your money and basically ran?
And in some sense, would we go back into the retail sector at these prices? I'm a little anxious.
Was that your only exposure, Massmart?
We had African Bank, and that of course gives you Ellerines as well, and we still have that heavily. So if clients want to be involved, or if investors want to be involved in that space, we reckon African Bank gives you a one-stop shop.
Netcare, that company also out. How do you feel about the healthcare environment? Obviously, this comes on the back of Mediclinic. I put it to Simon earlier. This is defensive. People get sick,
love the sector.
Bad or good economy.
Love the sector, yes. You know, I mean, healthcare, especially in an emerging economy. In fact, in every economy, healthcare seems like a fabulous place to be. Fantastic margins, people spending more and more and more every year. Medical inflation very high, nobody seems to care. It's cool, you know, you can just go on paying the new big fee. Having said that, in an economy like ours, we know that there's a lot of politics around healthcare, who gets it, who doesn't, who gets what kind of quality, who gets what kind of standards. So we were out of Netcare for many years now on account of just that anxiety about what kind of price regulation they'd be subject to. We were not big fans of that move into the into the UK. From here, I don't know.
Meaning healthcare group, that Netcare.
Exactly.
Element.
You know, for us, big ballsy acquisitions by South African groups internationally, not always a big
well,
plus.
we're the examples of something that has gone really right with South African companies making big acquisitions in the developed world. Are there any examples in your view?
Well, I suppose if you go back and you look at the likes of a Billiton and the likes of an MTN, okay, that's not developed world, but sometimes they somehow, SAB Miller, I suppose, has done well out of it all. So somehow you've got to transcend being seen as a South African company doing some sort of thing in the external market.
You've made it clear you don't care about the interest rate decision on Wednesday. We're obviously going to be focusing it on the board, and I'm going to ask you about it tomorrow and obviously on Wednesday, as I said,
let's see
Thursday
how
and
this
Friday.
debate evolves.
What do you care about this week? Is there anything in your book that is worth focusing on?
Well, you know, I'm really hoping we can have a strong finish into the new year. You know, old Santa Claus owes us one. We didn't exactly have the best close to last year. We sort of dribbled out into the remaining months. So if we can get up to that sort of 35,000 level on the All-Share
So shoot the lights out, pass through 33,000 the previous high. That's what you're looking for.
But we're seeing ongoing strength in economic numbers out of the US. So we saw retail sales today better than expectation.
So let me just get you
here.
This is your premise for the Pollyanna outlook on equities. That traction that we're seeing in the US.
Pollyanna outlook, yes.
And you know that I'm going to bring all that economic data out of the US swiftly your way in further discussions. Paul Theron, thank you very much.